Is it simply too soon to get a gauge of any of the impact right now? Yes, fine, we were talking about some softening as far as engagement is concerned, concerns perhaps going forward before we got Cambridge Analytica, but as far as whether it's advertisers, renegotiation, prices coming down, it's simply too soon.
Yeah, I think, one of the things, we've not heard any big advertisers come out and say we're pulling money off the platform. And that has happened before with not just Facebook and Google, but just other media platforms. We've not heard the big ad agencies talk about changes and shifts and kind of how their clients are reacting. So in the absence of that, people are going to be focusing really on with Sheryl Sandberg. She really is the voice of Facebook when it comes to advertising.
And maybe one reason advertisers haven't come out publicly with any of that is because they can shift from Facebook itself to Instagram, which is within the Facebook empire. Does that matter to investors if they shift spending from Facebook proper to Instagram?
Generally, no. And I think the reason that I think that we haven't seen really maybe one or two downgrades of Facebook and it faces regulatory overhang is because there are so many levers for Facebook to pull outside of the core Facebook.com. They have Instagram, they have Messenger, and they have WhatsApp.
First quarter advertising revenue, $11.8 billion. So that more than the $11.4 billion that was expected, more than the 42% increase.
Great context.
Worth noting, the stock is up 3% after hours, so investors liking what they see. The theme of this quarter, though, has been we've seen a lot of pops and then drops. We saw it with Caterpillar, we saw it with Twitter, we saw it with numerous banks earlier in the season. So, of course, I would not be shocked to see this 3% number either move in some direction. But for now, investors are liking that revenue beat. They're liking the fact that there doesn't appear to be any deterioration in the usage, which is, of course, crucial.
And talk about the advertising.
Their buyback, too. Increase their buyback authorization.
That helps, too.
But, look at that. Earnings per share, a GAAP basis, up 25%. That's a big, over what was expected. That's like a big beat. That's a really big beat.
We're also seeing headcount increase, so costs are increasing as well. Headcount is up 48% year over year, 27,742 as of March 31st, 2018. This is a company that has promised to spend a lot more on hiring to bring in the human element to sift through and vet a lot of the posts that show up on Facebook's platform all day long. Is that the answer, or can Facebook start to inch back towards artificial intelligence doing a lot of that?
It's both. It has to be both. There's going to be way more hiring for the foreseeable future. It's going to be a continued growth in people, even as they up the use of AI to try to govern their platform more effectively. The two have to go hand in hand.
And reading this in the announcement, Mark Zuckerberg talking about the tough year that Facebook had had, saying, despite facing important challenges, our community and business are off to a strong start in 2018, which of course dovetails with the existing public comments that they just haven't seen any real deterioration despite all the well-known issues facing the company.
But could I just chime in? In fact, it could be politically problematic for them to make a vastly greater amount of money than they were even making before. They have an image problem of the highest order. They are an absolutely unique company of a type we've never seen before that is under extraordinary scrutiny. If I were them, I might be mildly embarrassed, even though my shareholders, of course, are happy. It's a very dicey line they have to walk.